The rand has weakened since the beginning of the year. It has worsened the Reserve Bank's inflation outlook. It now predicts inflation will reach 6.1% in the third quarter before moderating gradually next year.
It has breached the 9 rand to the dollar, so we're concerned about the volatility in particular, but also the level. And the question, of course, how long it stays there and what its impact is. So you can see already it has retraced a little bit, but we would watch it quite carefully.
A weaker rand is generally good for exporters as it boosts foreign earnings, but it makes imports more expensive.
We've got to recognize that South Africa is trying to embark on a fixed investment program. Eskom has got a lot of money it needs to spend, so does Transnet. Most of that money, or a lot of that money, will be spent internationally. A lot of that money will go on imported equipment, which is necessary. And obviously, as the rand comes under pressure, the cost of that equipment keeps escalating.
The Reserve Bank has cited the widening current account deficit for the current rand weakness. Some analysts say an uncertain labour environment and unclear policy direction are also to blame. Downgrades by 3 ratings agencies may have also been contributing factors. And the relationship between government and big businesses is at best strained. The IMF has also reduced its economic growth forecast for the country to 2.8%. Analysts argue urgent talks between government, business and labour are needed.
It's high time that all the key stakeholders, the unions, the corporates and the government met even for a week or 2 weeks and tried to map a way forward in terms of saying, guys, how do we deal with issues like mining strikes? How do we deal with low wages in the mining space? And how do corporates address the fact that miners are demanding more salaries?
The Reserve Bank has also warned against high wage settlements. They could fuel inflation and force the bank to hike interest rates. John Motlogelwa, SABC News, Johannesburg.